Get some free giveaways today to help you with your technical analysis. Click on the link below to go to my website and you can download one or more of these 3 giveaways. I have an ebook on technical analysis basics for you. These are the contents of the ebook, several chapters on some basics, some indicators, some techniques, looking at gaps, looking at scale for your charts, and I've even got 2 steps to a high probability trade setup there for you. Another free giveaway is this easy candlestick pattern guide to the major candlestick reversal patterns, bullish and bearish, diagrams, descriptions of how they should be read and in what context. And a third giveaway, I have this Elliott Wave structure guide, 3 pages giving you all of the Elliott Wave structures with all of the rules you need to know and diagrams of the ideal form for each. Motive structures on 1 page and all of the corrective structures on 2 pages. So click on the link below and get any one or all of these 3 giveaways for free. Hello everybody, this is Lara from Pure Elliott Wave with an update of XRPUSD cryptocurrency pair. I've changed the data source. I'm using a conglomeration of several different data sources, so it's got much higher volume and so it should be much more accurate after some people complaining about the last data source I was using from Bitstamp. Yes, different data sources will be different and that's okay. I'm just going to go with the one that I can get that's got highest volume. Before I jump into it, we're going to be having a 48-hour sale of our online courses in the week before Christmas. I think it's going to be Thursday 18th of December at 2 p.m. for 48 hours until Saturday the 20th. If you want to be notified of that, you want to get on our email list. To do that, get some free stuff. Elliott Wave analysis of XRP at the monthly time frame. This is the entire price history of XRP, and I start my Elliott Wave count from the first lowest low in 2014. From this low to this high, there's a pretty good looking 5-wave structure up. 1, 2, impulse for 3, triangle for 4 and 5. I've got a whole bunch of notations on this chart, and I'm also going to add in the Fibonacci number sequence. The third wave here is 14.72 times the length of the first wave. That's not a Fibonacci ratio. I just want to see how long these waves are. And the fifth wave is 6.92 times the length of the third wave. So what you'll notice from this chart, from this 5-wave structure up, is something very, very typical for cryptocurrencies. It is the fifth wave where you get the greatest profit. It moves the greatest distance in the shortest amount of time. It managed to move nearly 7 times the length and potential profit of this third wave, and it did so in only 2 months, where the third wave lasted 17 months. So you want to hang on for the fifth wave for cryptocurrencies to get your profit. So I'm hanging on for my investments in XRP, which I made back in 2019, so somewhere back down in here. I'm hanging on until the end of primary 3, or preferably my original plan was the end of cycle 3, but it depends on how old I am and what I'm doing with my life at the time, because it's taking longer than I expected. Primary 3 and cycle 3 may only subdivide as impulses. I've got 2 wave counts looking at this movement differently at the weekly time frame. Let's look at the first. So we've got primary 1, 2, 3 an impulse with intermediate 1 and 2 and 3 underway, starting from this low here. This low here, this first main Elliott Wave count will consider intermediate 3 incomplete and unfolding as a long extension. So minor wave 1 complete, minor wave 2 moving lower as an expanded flat. Now I've got the Fibonacci number sequence on here so you can use it as a quick reference. Note that some of these waves exhibit durations on the Fibonacci number sequence. Here, intermediate 1 lasted 34 weeks, that's on the Fibonacci number sequence. Intermediate 2, 51 weeks, 4 short of a 55, not that close to a Fibonacci duration. So I'm using the Fibonacci number sequence to estimate when these future waves may end. Now please do note that not all of XRP's waves exhibit durations on the Fibonacci number sequence, so the best estimate we can get is to use that sequence, but we have to be aware it's a bit of a guideline. When we get toward this date, end of June 2027, primary 3 would have lasted a Fibonacci 55 months. If we get to that date and the structure looks complete and we can see some evidence of topping, we can see any weakness in upward movement following a blow off top, then it could end about then. So it'll be at this time that we will be more alert for the potential end to primary wave 3. That's how I'm using these estimations. 14.72, you may have just remembered that from the monthly time frame. This is not a Fibonacci ratio. This is the ratio of a big third wave to a first wave in XRP's price history. If we see that again, this third wave could end about 27.44. It won't move in a straight line. There will be bear markets along the way. Intermediate 4 will probably be a bear market lasting at least a month, if not 2 or 3. Minor wave 4 along the way up may also be a bear market. And I'm using the technical definition of a bear market in that it's a 20% reduction in market value. And I'm not going to change that definition because that would be subjective. I have to go with the standard, widely accepted technical definition. And the reason why I think that's really important, despite it being apparently quite unpopular here on for some viewers of this channel, is a 20% reduction in value represents how open your account or your long-term investment is to high volatility. If you have a market like this that regularly has relatively short-lived bear markets within the larger bullish run, then you're going to be having to withstand a more than 20% drawdown of your equity along the way up toward your final target. If we change that definition, we're obfuscating the insane volatility of this market. We have to be honest and acknowledge the huge volatility and the huge movements that this market has. So I'm not going to redefine a bear market because that would obfuscate how risky these markets are. Let's have a look at this wave C on the daily time frame. Starting here, wave C has to complete as a 5-wave motive structure. I don't think it's complete here because it hasn't moved beyond the end of A, and that would see minor 2 complete as a rather rare running flat. Now that's possible, but the subdivisions aren't that good either. Then we have 1, 2, the impulse for minuet 3 incomplete, subdividing subminuet 1, combination for 2, impulse for 3, zigzag for 4, and potentially an ending expanding diagonal unfolding here for 5. Within an ending diagonal, all of the subwaves may only subdivide as zigzags. So we have micro 1 a zigzag, and 2 and 3 perhaps an incomplete zigzag. This sideways movement of the last couple of weeks may be a little triangle for submicro B, and then C down to move below the end of A would complete a zigzag for micro 3, then another zigzag up for micro 4 must overlap wave 1 price territory because this is a diagonal, it can't move beyond the end of the second wave, and then a final zigzag for 5 must see subminuet 5 move beyond the end of 3 because when a 5th wave subdivides as a diagonal, it cannot end in a truncation. It has to move beyond the end of the 3rd wave of the same degree, and that would complete minuet 3, and then we'd expect another bounce or consolidation for minuet 4, and the invalidation point would be back here, and then a final 5th wave down for minuet 5. So this wave count expects that minor wave 2 has got probably at least a couple of months, if not more, of overall choppy, overlapping downward movement to complete the structure. Now remember from the monthly time frame, this low of intermediate 2 here on the alternate is this low here. What if this sideways movement is complete as a triangle? We could have intermediate 3 and 4 within primary 3 possibly complete. This is possible, but my problem here is this is intermediate 3 within primary 3 within cycle 3, and it's only 4.64 times the length of intermediate wave 1. Now for a normal market that would be acceptable, but for this market that's a lot shorter than its big third waves usually are, and this is a nested big third wave at 3 big degrees. I would expect it to be a lot longer than that. For that reason this is an alternate, but I am considering it because the sideways movement fits so nicely as a triangle and it has remained above wave 1 price territory. So intermediate 4 may not move into intermediate wave 1 price territory below 0.9301. Again, the Fibonacci sequence here, intermediate 3 lasted 28 weeks, not close enough to 21 or 34 to say it's a Fibonacci duration, and intermediate 4 at 44 weeks, no Fibonacci duration. So just again, be aware that these estimations, these waves may not exhibit a Fibonacci duration, and so they may not end at this estimated point in time. Here I can calculate a target range at 2 degrees. I'm calculating it using 14.72 from the monthly chart and 6.92 also from the monthly chart, giving us a range of 22.75 to 27.44 for primary 3 to end. Let's take a look at this at the daily time frame, the high of minor B here, is this point here. Minor wave C fits neatly as a double zigzag, W, X, Y. This actually has a really good fit. And minor wave E could, D, a complete zigzag, and E could be a complete zigzag as well. E of a contracting triangle may not move beyond the end of C. A new low by any amount at any time frame below 1.739 invalidates this alternate wave count, adding substantial confidence to the main wave count expectation of more downward movement for the main wave count. And that's one of the nice things about Elliott Wave. These structures have really clear, strong rules. There's only one Elliott Wave rule that involves a degree of subjectivity, and it's not this rule. The rule for E of a contracting triangle is absolute, it is clear. A new low by a fraction of a cent on a tick chart invalidates this wave count, and then we switch to the main wave count with more confidence. Let's have a look at some technical analysis now. Price is moving sideways with resistance at 2.65, support at 1.60. 2.65 began as resistance here, breakthrough, resistance, breakthrough, tests of support here, a breakthrough, and again it's acting as resistance. 1.600 should be really strong support. The volume profile, overall volume is declining. It's currently strongest on downward weeks, but overall volume is declining as price moves sideways. There is no new range and no signal for on-balance volume. It is making new lows prior to price, however, and so overall it is bearish, supporting the main Elliott Wave count. At the weekly time frame, ADX tells us there's a downward trend with a long way to go before the trend gets extreme. RSI is not oversold. Money flow is not oversold. There's a downward trend with a long way to go before conditions get extreme and oversold. The moving average situation is full bore bearish. The purple 50-day moving average is below the green 200-day moving average. They both have negative slopes now, and price is below all three. This is a full bore bearish look supporting the main Elliott Wave count. The volume profile at the daily time frame is also bearish. Strongest volume is on downward sessions. Overall, as price is mostly moving sideways, volume is declining. That's normal behavior for a consolidation. It's like a pause in the market. I expect the breakout for the short term, when it comes, will be downward. At the daily time frame, on balance volume has a narrowing range, so we will get a signal because these lines are converging. So draw these trend lines, your resistance and your support line, carefully across the pivots. If on balance volume breaks out first before price breaks out of the consolidation, that may give us an advance warning of the direction of an imminent breakout from price. This is one of the very few technical analysis techniques that can give you an advance signal, so use it carefully. It's a really, really good one. ADX is increasing. The negative DX line is above the positive. There is a downward trend indicated at both time frames, supporting the main Elliott Wave count. There is bullish divergence between price and RSI after RSI reached oversold. Price has closed lower here, but RSI has made a higher pivot. That indicates some weakness in downward movement that could develop as multiple bullish divergence before this bear market comes to an end though. And RSI didn't reach very deeply oversold, so I'm not necessarily going to say this is strong enough evidence that the bear market is complete. I think the bear market's still probably going to continue. And money flow is neutral. As price moves sideways, ATR is declining. That is normal during a consolidation, and price is currently within this bearish movement consolidating. I do still expect the breakout will be downward. That's it for me today with an updated XRP analysis. Don't forget our upcoming sale of our courses on Thursday the 18th to Saturday the 20th of December. Get on our mailing list and make sure you get notification, and we might be using promotion codes to do that. So you'll need to be emailed that discount code, so you want to get on our list and get the free stuff too. It's free.